SoFi and stock market investors, welcome back to the channel. My name is Jason. In today's episode, I want to talk to you guys about why I think this recent drawdown from SoFi stock could be a potentially life-changing opportunity in the stock. The tech sector over the last several weeks flat out destroyed. So many companies, Palantir, Microsoft, Salesforce. I mean, the list goes on and on and on of good tech companies that are producing great revenue and profits that are getting absolutely destroyed. And we're seeing a rotation into stocks like Comcast, Verizon, Costco, companies that, don't really grow margins too much. So I do think that this trend is only temporary, waiting for some macro headwinds to kind of blow away. But I think we need to take advantage of this opportunity, and I'm going to show you why. All right, stock market investors, if you could do me a huge favor, hit that like button and the hype button. It does really help us get into YouTube's algorithm. And if you want more SoFi and stock market content, make sure you consider subscribing to the channel. I'd really appreciate it. But oh my gosh, take a look at your screen. Are my eyes deceiving me? What's going on? SoFi's green today? What the hell is going on? Up 2.25% today. Hey, I'll take it. Because over the last 6 months, down nearly 30%. It's been quite the shit show. But the company is executing at all levels. So I think this is the time to take advantage of what the heck is going on in this crazy market right now. All right, all my stock market investors, I prepared a little slideshow for us today on why I think this could be a generational buying opportunity for SoFi stock. It's crazy that it's trading around 18 bucks considering it was $32 just in November. It's only February, so we might need to take advantage of this opportunity with the stock down nearly 50% from those highs back in November. It's quite remarkable. Just take a look at some of these top performance highlights from the Q4 2025 earnings report. Look pretty dang good to me there, investors. Revenue milestone. We crossed $1 billion in quarterly adjusted revenue for the first time. $1 billion bucks. Sounds pretty good to me there, guys. 37% increase year over year. What bank is growing 37% year over year that's as established as SoFi stock? I don't think there's many of them. If you could find some, let me know in the comments down below. Growing around 40% year over year. Yo, I love that. Record member growth, added a record 1 million new members in a single quarter. That's crazy. We're talking 4 to 5 million new members just in this year coming up, right? We are around 14 million right now. If we add a million per quarter, we're talking closing in on 20 million members. That membership growth also up nearly 40% year over year, coming in at 37%. This is nuts to me that this stock is trading below what it was trading at 5 years ago. It makes no sense. Sometimes the market becomes irrational. And when they become irrational and become a crying baby, selling everything, we have to take advantage of those trends. Explosive product adoption added 1.6 million new products, pushing total product relationships past 20 million. Soaring profitability. Adjusted EBITDA hit a record 318 million, up 60% year over year growth. What bank or even what tech company is growing 60% year over year growth with 31% margins? There's not a lot of companies in this basket where SoFi is sitting right now. Whatever you say about the stock price, in the short term, I don't care about it. I really don't. I'm continuing to add to my shares. I got closing in on 6,300 shares. If you don't believe that I own those shares, I made a video a couple videos back showing all my different shares in my brokerage account. If you want to check that out, I'll leave a link for that in the description down below. Diversification success. Revenue from the financial services and tech platform segments combined 579 million, now representing 57% of total revenue. So that fee-based revenue ticking up, guys, quarter after quarter and year after year. Here's some strategic and technical wins I want to break down for you guys in this video. The Rule of 40 Excellence achieved a score of 68%. Revenue growth plus EBITDA margin well above the elite 40% benchmark for high growth tech companies. So this isn't just a bank. And if you think it's just a bank, you're not looking hard enough. The score of 68%, well above the 40% benchmark for these tech companies. The success is great. And then we just lost the crypto and stable coins. In late 2025, SoFi became the first nationally chartered bank to launch consumer crypto trading in its own stable coin, SoFi USD, on a public blockchain. I do own a little bit of crypto. I'm starting to add to my crypto position now because the down draw has been remarkable in crypto as well. With Donald Trump appointing a new Fed chair that's pretty conservative, a lot of these things like Bitcoin, Ethereum, the high tech stocks are seeing a down draw because they're worried about the money printer being shut off. A very value concern. It's a warranted concern for sure. But if these companies are still adding to the top line and the bottom line quarter after quarter, they don't need free money because they're producing their own free money with the free cash flow that they're producing quarter after quarter. And I love that, guys. International payouts rolled out SoFi Pay, a blockchain powered remittance product now active in 30 countries, making transferring of funds across countries easier and easier over time. Tangible book value surged to $8.9 billion, an increase of $4 billion year over year, following aggressive capital raises and eternal growth. So if we could consistently add to the book value, that makes us even more valuable as a bank, because most banks you kind of want to value in that tangible book value perspective. But from a technical and strategic standpoint, I think SoFi is in a better position than they have ever been. So is the stock getting cut pretty much in half warranted? I don't really think so. All right, now moving on. Looking ahead, 2026 guidance put out by the management team here at SoFi. Management projects continued aggressive expansion for the upcoming year. Adjusted net revenue expected to reach almost $4.7 billion, roughly 30% growth. If we're growing net revenue 25 to 35% quarter over quarter and year after year, I'm all for that. Adjusted EPS target of 60 cents over the coming year, implying significant bottom line scaling. Where we're at with this company right now, we want to see that bottom line really start to grow. And with this 60 cents that they're predicting in 2026, you got to love that. You have to love that. The member base, they're anticipating at least 30% year over year growth. The growth at this point in the trajectory of this company since 2021 to still be growing at 30% pretty much across the board, remarkable in my opinion. 5 years of explosive growth. Check out this scale. Members, 1.9 million at the start of 2021. We're at closing in on 14 million members. We will surpass that in this upcoming quarter. There's no doubt in my mind. The revenue going from 977 million in GAAP to 3.6 billion, 270% increase in that duration of time. And the stock is trading lower now than it did back then. Tell me how that makes sense. Let me know how that makes any sense to you in the comments down below. I don't understand it. Net income losing 524 million to a 481 million profit. We've seen the company flip from the scale phase and losing a shitload of money to now we're looking at closing in on $500 million in profit here in 2025. The market cap, 13 billion to 23.5 billion, up 77.7. And if we take a look at the market caps from 2021, 13 billion up to 23.5 billion. And if we take a look at the growth of net income and revenue and compare it to the market cap increase, I see a discrepancy here of 270% and 77%. And from losing 500 million to making a $500 million profit. There's some serious discrepancies going on here with SoFi from what the company is doing and where the stock is trading at right now. But the forward PE is looking decent. It's not great, but with the growth that the company is having, I'm willing to pay this price in the forward PE segment. I wish it was under 40. I'm not going to lie. And the PEG ratio is getting lower and lower than it's been in a long time at 2.46. I like buying it under 2. So if this stock goes into that $16, $15 range, absolute no-brainer. Price to book trading at really good levels right now, as well as price to sales. And with the increased quarter over quarter and this growth ahead of us, I think the stock price is really going to shoot through the moon sooner rather than later. But obviously, macro headwinds will have a lot to do with where this stock trades in the coming year or so in the short term. The balance sheet, $5 billion in cash, only $1.94 billion in total debt. We could go pay off all of the debt right now and still have $3 billion in cash on our balance sheet. But when they do capital raises, a lot of it is to move debt around and get better rates on the current debt that we have, consolidating at better rates. And I'd rather them do that than pay tons of interest on some of these loans that they have out. So I think raising capital is not necessarily a bad thing, in my opinion. And here's the craziest thing, right? It trades at just $18 per share. 5 years ago, the stock traded at over 20 per share. Not only has the stock essentially gone nowhere in that time, but it's actually worth less than it was before, despite the phenomenal growth in members, revenue, profitability, products, you name it. The key takeaway, SoFi technology stock is down 30% year to date in 2026 and sits 44% its all-time high. Analysts have a consensus price target of 26 per share. That's 40% gain in the next calendar year. You want 40% on your money? I do that. I would like that. And I don't think the S&P 500 even sniffs 40% this year. So if the stock can even get up to $25, $24 per share, you're talking about 30% on your money from current levels. And I think that significantly outperforms VOO and the S&P 500. Now, real quick, I just want to go over some of the highlights from this past quarter's earnings report real quick before I wrap up this video. Record adjusted net revenue of $1 billion. We touched on that earlier. Adjusted EPS this quarter of 13 cents. 17% GAAP net income margin. I love that. 9 straight quarters of profitability. Fee-based revenue of $443 million. 53% up year over year. 44% of adjusted net revenue. That's going to cross over the 50% threshold sooner rather than later. And then the tech and financial services sector, $579 million. We touched on that earlier. Record loan originations up $10.5 billion in the quarter. That's talking, $40 billion to $50 billion in loan originations over the next calendar year. Personal loan net charge-offs, 2.8%, down 57 basis points from a year ago. I like that as well. Total deposits grew to $4.6 billion quarter over quarter to nearly $38 billion. We're going to cross $5 billion in deposits and $40 billion in total deposits very, very, very soon. And that tangible book value of $1.7 billion quarter over quarter to $8.9 billion, including benefits of new capital raised. This is kind of where I'm at right now. I'm looking at this objectively. I'm not trying to pump the stock up. I have 4,000 subscribers. Nothing I say or do is going to make people run and buy tens of thousands of shares, millions of dollars worth of shares that's going to pump the stock price up. I actually don't want the stock to be pumped up. I want a slow, gradual increase in stock price to make us money, long-term, sustainable gains. That's what I want. And if the proof is in the pudding, guys. If we look at this from an objective perspective, everything looks pretty good right now to me. And that's why I'm continuing to add to my position. And I think this could be a life-changing opportunity. Make sure you do your own due diligence. I did mine. I'm showing you what I'm looking at in order to gauge whether or not I'm adding to my current position. please consider liking and subscribing to this video. Hit the hype button as well. I appreciate you guys from the bottom of my heart. We'll catch you on the next video. Peace.